listed company, issue of share capital. Let me start the practical problems in this. Issue of shares at par. First we are going to learn. Issue of share at par means a face value of the share and issue price is equal. For example, a company is issuing share at rate of 10 rupees. Even the company will issue to the public also 10 rupees. A face value and issue price used to be equal. See, this particular term is called as issue of share at par. Let's see in this question. M and M Company Limited issued 1 lakh equity shares of rupees 10 each. The amount payable is follows: rupees 3 on application, rupees 5 on allotment, rupees 2 on first and final call. All the shares were subscribed and all the money received duly pass the journal entries. See, in the question itself we can analyze whether this question belongs to par or premium or discount. Let's see in this. The share rate given in the question 10 rupees, and when you add application money, allotment money and first call money, you will get remain same. Okay, so 3 plus 5 8, 8 plus 2 10. Even the value of share also 10, and even the company also collecting from the public 10 rupees. So this particular term is called as par. Now we are going to learn about a recording procedure at the time of issuing the share to the public, how the company used to record the transaction that we are going to learn. Let me see the working note first. Yeah, it's in working note. First we need to calculate what is the total capital of the company. See, equity share capital 1 lakh into 10 each. Rate per share is on 10 and number of shares issued by the company is on 1 lakh. So total company going to collect from the common public as a share capital total 10 lakh rupees. This 10 lakh a company going to collect in 3 installment. That installment called as a first installment equity share application, a second installment called as equity share allotment, and third installment called as equity share first and final call. So at the time of application, company is collecting the number of shares is on 1 lakh into a 3 rupees a company going to collect at the time of application. So total 3 lakh rupees company is collecting at the time of application. The second installment called as equity share allotment. At the time of allotment, total number of shares is on 1 lakh and rate per share a company going to collect 5, and total 5 lakh rupees company going to collect at the time of second installment. And third installment called as equity share first and final call. So here total 1 lakh shares into 2 each, and total company going to collect 2 lakh rupees. At totally 3 lakhs plus 5 lakh and 2 lakh, total 10 lakh rupees a company going to collect from the common public. So at the time of collecting the capital from the public, a company can collect 5 installment, but I took here as only 3 installments. Okay, so in this way only a company used to collect a capital from the public. Let's see how the journal entries we need to record. So before recording the journals, so we need to follow a certain procedures. We need to write the title journal entries in the books of M and M Company Limited. So we need to record first heading as a title. So to whom we are going to prepare the journal. So in this question we are going to prepare a journal for M and M Company Limited. That is the reason we should write a journal entries in the books of M&M Company Limited. And also we need to make a format of date column, particulars column, LF column, debit column and credit column. We need to make it. Here in the date column I recorded as a serial number, because in this question date is not there. So if it is absence of date, so we can mention as serial number. I mentioned here as a serial number. Now we'll see the recording system, how we need to record. So already we know a company going to collect a capital from the public in 3 installment. So each installment a company should record the transaction in the journal. So a company going to receive a first installment as application money from the public. So when collecting money from the public, a common public should deposit their part of capital as 3 lakh rupees into the company's bank account. Company will not accept direct cash from the public at the time of application or allotment or first and final call. They should deposit all the installments into the company's bank account. So that is the reason. We'll see the journal now. A bank account debit to equity share application account. So here the public deposited amount into the bank as a application money, that's why bank is debited, and to equity share application account credited 3 lakh rupees, 3 lakh rupees. Let's see why bank is debited. In accounting we have a accounting rules, okay. According to American approach, bank come under asset. So asset rule is when asset is increasing we need to debit it, when asset is decreasing we need to credit it. So when company is receiving application money from the public, a bank balance increasing, that's why a bank is debited, and a company received as a application money, that's why the equity share application money credited 3 lakh rupees, 3 lakh rupees. After recording this we need to write even the narration. It is a small note of this transaction. So being equity share application money received for 1 lakh equity shares of rupees 3 each. So the company received application money through bank from the shareholders as a first installment. After receiving this money, a company should transfer this application money to capital, because a company received this 3 lakh rupees as a first installment for the purpose of capital only. So after receiving this application money, company should transfer this application money to capital account. So second entry is an equity share application account debit to equity share capital 3 lakhs, 3 lakhs. The application money transferred to capital. The first entry for receiving the money from the shareholder as a application, and the second entry for whatever the money received through applications, that money transferred to share capital. So that is the reason we need to debit the equity share application and we need to credit the capital. Here we credited the capital because when a capital increase we need to credit it according to American approach. So first installment is over. So each installment we need to prepare 2 journal entries. So here one entry for receiving and second entry for transfer. And next is a third installment. Third installment is called as allotment. So it's an equity share allotment account debit to equity share capital 5 lakhs, 5 lakhs. A company going to collect as a second installment as a 5 lakh rupees from the shareholders. It is an equity share allotment to equity share capital account. Here a company transferred allotment money to capital as a due. As in the first installment, first the company received money from the shareholders, then company transferred. But second installment onwards, what company used to do? Company used to transfer a money to the capital as a allotment, then a company will receive the money from the shareholders. The reason is, in the first installment company don't know who is the shareholder, so a company used to receive first money as a application, then the company used to transfer. After getting the applications, now company know who is the shareholder of the company. So that is the reason now company will transfer the allotment money to capital, then the company will receive it. So second entry and third entry almost same. So here the application money transferred to capital, here the allotment money transferred to capital as a due. So equity share allotment account debit 5 lakhs to equity share capital account 5 lakhs, being equity share allotment money due for 1 lakh equity shares of rupees 5 each. It is a due, a company going to receive this due. Next we'll see as a company will receive that allotment money is in fourth entry, bank account debit to equity share allotment account 5 lakh, 5 lakh. All the installment the shareholder should pay into the company's bank account only. So now a second installment bank is receiving. So bank account debited to equity share allotment credited. Again the bank balance increasing because of second installment. The second installment is an equity share allotment, that's why we credited equity share allotment. Already I said according to American approach, whenever the bank balance increasing we need to debit it, and whenever the bank balance decreasing we need to credit it. So here the allotment money a company is receiving through bank account, so debit the bank and credit the equity share allotment account 5 lakhs 5 lakhs. Next is an final installment equity share first and final call. Usually call stage a company can collect in 3 installment: first call, second call and final call. But what I did, I taken as all the installments together, like all 3 installments in the first call I took as common entry. So we need to debit equity share first and final call account debit to equity share capital. Even here also the same. If you observe, the second entry and the third entry, fifth entry remain same: equity share first and final call account to equity share capital. So here a first and final call money we are going to transfer to capital as a due. Okay, so equity share first and final call account debit 2 lakhs and to equity share capital account is an 2 lakhs. So first and final call money transferred to capital as a due. So we should write as being equity share first and final call money due for 1 lakh equity shares of rupees 2 each. This particular first and final call money the company going to receive from the shareholders. So as usual the bank only will receive the installment. So bank account debit to equity share first and final call account debit 2 lakh 2 lakh. So this first and final call money due 2 lakh, the same 2 lakh a company received through the bank, and when we should write the narration being equity share first and final call money received for 1 lakh equity shares of rupees 2 each. So this what a company used to make the record the journal entries at the time of issuing the share capital. We'll see one glance. As a first installment we have 2 entries, and second installment we have 2 entries, and third installment we have 2 entries. As a first installment company will receive money from the shareholders as a application and the company will transfer to capital account. Second installment onwards company will transfer to capital account first as a allotment, then the company will receive the money. Already I said the reason is in the first installment company don't know who is the shareholder, and after first installment through the applications now company know who is the shareholder. So that is the reason second installment onwards what company used to do, first company will transfer to share capital as a due, then the company will receive the money. So bank account debit as a first entry and to equity share application account 3 lakh 3 lakh, and the second entry equity share application account debit to equity share capital 3 lakhs 3 lakhs, and third entry equity share allotment account to equity share capital 5 lakh 5 lakh. Then is an fourth entry bank account debit to equity share allotment account 5 lakh 5 lakh, and the fifth entry equity share first and final call account debit to equity share capital account 2 lakhs 2 lakhs, and the sixth entry is an bank account to equity share first and final account 2 lakhs 2 lakhs. We'll come to the conclusion. The first entry, fourth entry, sixth entry remain same. The first entry, fourth entry, sixth entry remain same. The bank we need to debit it and we need to credit the first call, we need to credit the application, we need to credit the allotment, and we need to credit the first and final call. And the second entry, third entry, fifth entry is an unique entries, as in we need to debit the application, we need to debit the allotment, and we need to debit the first and final call, and we need to credit the equity share capital. So once we understand the sequence of this particular thing, so it is easy to understand. Hope you understand this particular explanation.